We're shifting gears to exercise 216, and with this change in problem, we're changing to a different company. Here we're looking at a consulting firm called Help Today. They began operations on August the 31st, and the good news is their accounting team has already done the journal entries and they've already done the posting and they've done the trial balance, so we at least know we're to the point at which total debits equal total credits, and we're moving on from that point. We're pretending as if we're at the end of the month, August the 31st, and these are the account balances and amounts that are listed. And now we're going to use that trial balance information in order to prepare the financial statements. And remember, there's an order to our basic financial statements. The first one is going to be the income statement. And to back up, I like to relate the income statement to a ruler or a measuring stick. And why I like to relate it to that is that I feel like it measures the performance of a company for a specific period of time, like whether that period of time is a month, a quarter, or a year. But again, measuring for a specific period. Specifically, the income statement summarizes all the revenues and expenses for that specific period of time. Sometimes we know the income statement by slightly different names. If you look at different annual reports, sometimes they call it the operating statement, the earnings statement, or a really popular name for it is the profit and loss statement. Sometimes you'll hear that abbreviated as the P&L. Nonetheless, it's the same income statement summarizing revenues and expenses for a period of time. So let's go ahead and jump in and start preparing the income statement. Like any of the basic financial statements, the first thing that we want to list is the name of the company, Help Today. That's an important part of the process. Also, we want to indicate which statement it is. We want to indicate, is it a balance sheet? Is it an income statement? So we're going to list income statement. The third important part of the header, and often forgotten, is for what period of time or point in time is the statement actually reflecting. Keep in mind, we just began operations on August the 31st. We're indicating that we're preparing the income statement as of the end of August. Also keep in mind an income statement measures things for a period of time, so we're going to indicate that this income statement is for a month ended 31st. What that means is it's recording revenues and expenses from August 1st to August 31st. Then we're going to chug through and determine which of the accounts we have listed here should be included and reflected on our income statement. Keep in mind, we said revenues and expenses, so I'm going to go ahead and set up the summary here. Basically, it looks at what our revenues are versus our expenses and determines whether we have a net income or net loss. If revenues exceed expenses, we have a net income. On the other hand, if our expenses or the cost of doing business happen to exceed what we earn from selling our products or services, that would be considered to be a net loss. So let's start jumping in and figure out which of these accounts fit within these broad categories. If we remember, assets are reported on the balance sheet, not the income statement. So let's go through here and figure out which of these items are assets. Cash, accounts receivable, supplies, land, and office equipment. They're all items that benefit our future, so we're going to take them away. Then the next thing is liabilities are also reported on the balance sheet, not on the income statement. So again, let's look through the list and indicate and determine if there's any liabilities. Accounts payable, a good clue of a liability, not always, but if it has the word payable or unearned, now they can have slightly different names. Those are a good hint that that's a liability. So let's go ahead and remove accounts payable. Next, any other items that will be reported on the balance sheet, not the income statement, is equity. Common stock is an equity account and therefore reported on the balance sheet. So let's go ahead and take that one away also. So much shorter list, but we're not done. Dividends, last and not least, is reported directly on the statement of retained earnings. Keep in mind, it's not a revenue, it's not an expense. A lot of people confuse it with an expense. It's not necessarily a cost of doing business, it's a withdrawal to our stockholders. So that's reflected directly on the statement of retained earnings. So we're going to remove it. So what we're left with is our list of revenues and expenses, and let's see how we should reflect those on our income statement. Our only revenue account happens to be consulting fees earned. so listed under revenues, it's $32,000, consulting fees earned. If we had other accounts, we would just list them one by one and also produce a total. Being it's our only account, it doesn't make sense to produce a total here. So let's move on to our expenses. We've got rent expense for $3,000. And why I've put it in this middle column versus all the way to the right is I'm going to total these up and then put the total of the expenses all the way to the right. Just helps out with keeping it organized. Salaries expense for $9,000. Telephone expense for $500. And last and not least is miscellaneous expense for $1,800. Now that I have all of the expenses listed, I'm just going to simply add those up. 3,000 plus 9,000 plus 500 plus 1,800. Total expenses are going to be 14,300. Again, the purpose of the income statement is to summarize the revenues and expenses. Then we're going to look at the difference. 32,000 revenues minus 14,300 in expenses. Keep in mind, expenses are the cost of doing business. They take away from the profitability. Leaves us with a net income of $17,700. If we had turned these figures around and expenses had been, or the cost of doing business had been larger than revenue, it would have been a net loss, and oftentimes we'll record that in brackets if it's a net loss. The next item we're going to move on to is preparing our statement of retained earnings, and I've got a separate video for that.